Dipan Mehta is with us from Elixir Equities. Dipan, good to have you with us here. Good morning. We lost the line earlier. Just a quick word. I think we'll get to gold if you have thoughts in a bit. But that first question on defense, which Nigel was asking you, if you have any thoughts. Markets usually try to price a lot of this in, and this has been well advertised. What's your sense? I'm talking about the defense, the NATO defense bump up, spending bump up. Would you buy anything out of the lot? BEL, of course, I think is on the record saying that, I think their exports are about $100 million, and that'll perhaps go up to about $120, $130 million this year. And that's the sizable one. Anything you like from a defense export opportunity, Deepan?
Good morning, Prashant, and thank you for having me on your show. No, I think that exports are still playing a very small portion of the business for a lot of defense companies, except for maybe DCX, which has got an Israeli connection, and therefore they have a lot of exports over there per se, and there could be one or two other companies as well. But PSU defense companies, which are sitting on massive order book position and which stand to benefit tremendously from higher defense spends within India, I think their export proportion is pretty limited, and sure, it can go up, but these things take a lot of time. But nonetheless, as far as strategy for defense stocks is concerned, I think wait for more peaceful times, and a lot of the attention and the momentum will go away from defense stocks. They can correct 15, 20, 30% also, as we have seen in the past. And that's a good entry point because earnings visibility remains strong. And all these geopolitical events, I don't think are going to end pretty much soon. It's part and parcel of life. So whenever there's a flare-up anywhere in the world, defense stocks will come back into focus. So a simple strategy, buy these stocks at correction when entire defense or any kind of conflict is not in focus, and when these stocks are just kind of lying low.
So buy during times of peace. And then sell during times of conflict. But not sell, but buy when there's peace.
Buy when there's peace, and then war is when typically those prices soar, and that's what we've seen in the past.
Surabhi, just one thing. The flashes are at the bottom of the screen, and maybe we played the sound bites out, and I thought it was interesting, and I wanted to put this out for our viewers because there's a lot of excitement around whether we'll be able to, because the numbers are so large, right? They look so tempting.
The European spends as they go up.
So at 3.5% of European GDP, it'll amount to, because GDP is also increasing at very slow rates. I mean, but it'll be 850 to 900 billion euros, right? From the current 450 billion euros. So the numbers are massive.
Yeah.
And but as that Bank of America analyst has pointed out, he said there is a lot of this, we've got to buy European. We don't want to buy anything because at times of war, like for example, what we are doing, right? We want to buy in-house because, how can you rely on other people? So you got to invest in Europe to be able to actually, I'm not talking about, it's not going to be everything because we've heard from lots of companies we've spoken to, things like artillery, etc., that you can make here and supply. But the slightly higher end stuff,
the integrated systems, etc., they'll have to be done in Europe.
You know how much Russia spent on defense last year? Around 150 billion approximately, which is 7% of their GDP. And that was up by 38% in the last year. So it's clearly showing the kind of focus on defense spends globally as well.
Yeah, but 150, but this is, 6 times, 7 times. I mean, if they get to the European. But Russia is the big bear in terms of what's leading to all this higher spending.
Sorry, just to complete, since we're going on a tangent, yesterday's comment was Putin is misguided. He's just a misguided man, right? That's what he said. Mr. Trump said.
He did?
He's just misguided, He didn't call him out saying he's a bad person or anything. He's misguided. That was yesterday's comment.
Yeah, no, absolutely. And, more on this one in a bit. But as we were pointing out, the defense index, of course, down about 2% or so yesterday. Dipan, what else is on your mind in terms of specific stocks? I mean, the mid and small cap part of the market is really, at least yesterday worked itself into a frenzy. A lot of action, a lot of chatter, a lot of news flow. Anything comes to your, came to your attention?
Well, Prashant, basically my mind is still now looking forward to 9th of July. The 90-day pause ends, for all these tariffs, Trump tariffs, and what's going to be the outcome at that point of time? Is it there going to be a further, time limit given to get into individual deals with the US? Are tariffs going to come back the way they were? So all of these things are very important from the market perspective. And the sideways movement which we have seen for the broader market indices, I think that may have a decisive move depending on what the outcome is. End of the day, geopolitical events do not have such a massive impact on the underlying fundamentals of the economy or corporate profits, but tariffs certainly will. And that I think is an important indicator to watch out for. At the same time, I think from a longer term perspective, really hoping for earnings to move up, earnings growth to move up. Last year was not that great in terms of earnings growth. There are a lot of variables which should lead to higher earnings growth, lower interest rates, lower taxation, better monsoon, pickup in consumption. But we need to see the actual numbers in the corporate profits before we can bid stock prices up higher, because this is only so much that PE expansion can take prices higher.
Dipan, want to discuss once again Vodafone Idea with you. There's never a dull moment. Now there are reports which are indicating that a consortium of banks is coming together. It could be led by SBI to give a bit of a helping hand. They could be willing to offer a loan. I mean, numbers are all kinds of numbers are doing the rounds. Could be as much as, I think the company wants to raise 25,000. Now, how they convince the banks to lend is another question. And then there was this other report that maybe the government could look at deferring the AGR payments, etc. Any point looking at Vodafone?
I don't think that unless there's a comprehensive revival plan where the government chips in, the banks chip in, and there's a proper road way to profitability or even survival, I think till that point of time, serious investors will not enter the stock. You will, of course, have punters buying into a stock. It is low priced. You can buy in bulk, 4 or 5 paise also. If it moves up or moves down, you can make a profit or a loss. So it's a punter's delight. But from serious institutional investors, long-term investors' perspective, unless we don't see strong intent followed up with plans, definitive plans how to turn it around, I don't think investors will buy into the stock. And if any bank or consortium of bank on its own is trying to make a plan, then I think investors may not look at those banks also in positive light, because that at some point of time, NPS could creep up on that account as well. And we have seen how corporate accounts, when they've gone bad, how they have impacted the stock prices of these companies. I think Yes Bank, IndusInd Bank, and some of the other companies and the PSU banks in the earlier era, they were all impacted very heavily by corporate accounts going sour.
Oh, point taken. Absolutely. That's a good word of caution to put out. Need to watch out for how the story progresses. Indeed, if they get banks to lend, which will those banks be? And then who's the guarantor to those loans? Okay, so that's Vodafone Idea. That's a no-go for Dipan. Dipan, very quickly, PB Fintech. Nimesh was just telling us that today there could be a block. Maybe promoters sell a little bit of their equity. And we know that they're setting up their separate healthcare vertical. Maybe some of this money goes there. We don't know. But on the listed business, what's your view?
I think it's a good business, and unnecessarily the management is trying to get into healthcare. And that too, when I saw the plans, I didn't think they were anything different from what some of the other hospital companies are doing. Core business is doing well. This is just causing a lot of distraction from investors' perspective, and which is just not needed at this point of time. But nonetheless, I think stock price should be the stock should be kept in mind, because it's a solid growth company and a good play on insurance sector.
Dipan, any thoughts on Castrol? I mean, again, it's a global deal perhaps in the making. Shell, apparently, there are reports that Shell is looking to buy British Petroleum. British Petroleum owns 51% in Castrol. We don't know if it will happen or not happen, but that's going to be the mother of all oil deals, at least. Any thoughts?
No, Prashant, I think Castrol has just fallen off the grid for many investors and analysts because of very slow growth. And it was a great stock when I grew up back in the 90s. But at this point of time, I think it's off the radar. And a deal like this may take place. It may cause an open offer, some amount of trading volumes. But end of the day, I'm not convinced of the long-term growth story because of competition, because of track record. So it's an avoid for me.
Just a couple more names. As I said, I mean, mid and small cap space, real amount of action. And exchanges were at the center of it. So there was MCX, right? There was that brokerage note, MCX, 10,000 rupee target, UBS. IEX, there was a Bernstein note saying, well, the stock's fallen enough and maybe it's time to buy. And of course, we reported that NSE is the National Stock Exchange is filing for a consent, essentially looking for a consent terms with the regulator. And that'll be kind of the big step ahead. The IPO may be far away, but this is the crucial step. So just wanted your sense on this space, Dipan.
No, we've been positive on MCX and that's given great returns. But look, valuations are really stretched at this point of time for a business which we know is a monopoly but has got a lot of earnings volatility because their revenues are dependent on volumes and volumes are not steady. So at this point of time, the risk return doesn't favor buying any exchange. Better to buy them when there are bearish trends and markets volumes have come off and these companies are reporting poor profits. That's the time to enter a cyclical business like an exchange.
Any sense on these amine businesses, Balaji Amine, Alkyl Amine? I mean, I don't track them very closely, but somebody was saying that maybe things are starting to turn here. Things are starting to look up for these businesses, if you own them or track them.
No, Prashant, I think it's a very good investment theme or a sector to track. Specialty chemicals per se, I think, are after 3-4 years or rather 2-3 years of down cycle, a lot of the sectors and products are doing very well. Crude oil prices and basic material prices have stabilized, so that's offering comfort on the margin side. At the same time, this China Plus One strategy is improving the export market. Domestic demand also is improving in terms of pickup in industrial consumption. And it's a great investment theme to track. It's just that it's a complicated sector. And if you buy these stocks as a basket, maybe you are better off. But yes, I think all these amine companies and some of the other specialty, I think numbers which came from SRF, Naveen Fluorine were all quite interesting. So I think you can get a few winners over there, but you need to research them far more stringently because of the complexities of the product and the business.
Okay. All right, got it. Dipan, good conversation. Thank you so much for joining in. We look forward to catching up again soon.